How you doing, everybody? I hope you're all doing great. Stock Option Sniper here. First and foremost, I'd like to thank each and every one of you that are subscribed to my channel, each and every one of you that are sending me messages telling me that you watch my channel and privately sending me your results from my channel and saying that, yo, I watch your videos. I appreciate each and every one of you for that. And just real quick, to those that bought merches from my website, I'm giving you all a surprise. Just message me and show me the receipt that you bought a merch from my website, and I got a surprise for you. We have new cool merch. Everything is out right here. We got different colors for male, females. We got hoodies. Winter in New York is coming out. And if you're also part of my community, my trading community, my Patreon, the link is in my bio. We have students that are constantly killing it every single day. But I don't want to waste any more time. But you guys, I'm gonna go over a very cool strategy with you guys. We're gonna talk about the Wyckoff rule. If you've been in my channel the past previous videos, I believe we have about 15 videos that are up right now, 15, 13, whichever. I want to give you guys the rules to Wyckoff within this point. I think you guys have learned so much, and it's pretty advanced. So check this out, you guys. Let's go to a stock here, right? Let's go check Exxon. Let's go to the 4-hour. Let me delete everything. Hang on, is this recording? Yeah, it's recording. Cool. All right. So you guys, just real quick, I want to know if it's recording. So the Wyckoff rule, right? We have individuals telling me that they are following our rules. They are following the rules of the strategy that I give them, right? We have that we have the structure. After the structure, we have the S&D zones. Once we have the S&D zones, right, we confirm that by a form of Wyckoff, right? And then we write it all the way to our price target. But then the issue is that we have individual messing it up by not waiting for their confirmation or not understanding the trend. If you look at my past videos on the golden goose strategy, you'll understand what I'm talking about. If you have not seen that video, go back to my channel and rewatch that video. Otherwise, this video would not make sense, right? So once you have that confirmation and understand the trend of the stock, you should be only using the Wyckoff distribution if it's in a downtrend. And if it's in an uptrend, you should just be worried about the Wyckoff accumulation to reaccumulation to make the stock even go higher. What do I mean by that? So check this out. We understand the market cycle already, right? We have the accumulation, then we have the markup, then we have the phase E for the stock to go higher, right? If you have not seen my video as well on the market cycle, go watch that right now, right? My videos is on a build-up basis where when you watch the video, it's a step-by-step videos. It's not a video where everything is confusing, a new strategy every day. No. This is a step-by-step video, right? Then you have that distribution. After the distribution, you have a redistribution and just the markdown, and the stock just keeps going lower and lower. So this video is about this. We have individual trying to buy the market up. What am I trying to draw here? Right? We have the distribution, we have the markdown, then we have the price going down, right? Back to the structure that we drew. But then we have individual trying to long the market on a downtrend, which makes no sense, right? What do I mean by that? So if you were in this area right here, this part of area, let's say you're in a higher time frame, right? You're in this area. Let's make it what is the burgundy, whatever color this is, right? Let's say you are here. So you think in a lower time frame, right? In a lower time frame, you're looking at the stock, and now you're like, okay, this is going up. It's bullish. We've been getting beat up, the stock has to bounce, right? And this is where people get confused, and this is where people blow their account. So what you should be understanding is where the stock is going. Once you find where the stock is going, when I say the stock is going, it means the entire trend on a bigger picture, right? It's in that golden goose video that I was talking about. So once you have this trend right here, people think that do not study the market. People think this is the BC, the buying climax. No, I'm sorry, it's not buying climax. The selling climax, right? The SC, the selling climax. They think this is the UT. No, the AR. I'm all over the place here. The AR, and they think this is the spring, right? They think this is the spring SP. You guys know what that is, the spring, and they think this is the run up. This is the rally, right? This is the sign of SOS, the sign of strength, right? So now they think this is the run up. Next thing you know, they get that run up thinking the stock is going to go higher, right? Thinking the stock is going to go higher, and what happens? Boom, market just short, and they be like, God damn, I lost everything, right? So this is what this video is about. I'm going to teach you guys the rules. So let's go for example here. I'm going to keep my drawing there just in case we have to go back there later, right? I can't see properly on Exxon, but my chart won't let me. But let's try this, right? This is a great example right here. So we understand that the stock is in a downtrend, right? So we have the stock in a bull rally, then we have a markdown right here, and then the stock tremendously fall. This right here in the lower time frame is a markdown, right? Then we have more markdown happening, and then boom, go down even lower, right? Then we have a rally. Now we have that SOS. Then we keep going even higher, right? Then we have a redistribution, go higher, and boom, right? You potentially go up here and then fall even lower, right? But this video is not about the structure. This video is about the Wyckoff rule. So what I'm saying is that when the market is in a run up like this, and you've been in a super downtrend, don't try to short the market when you know you have an understanding that this right here is the entire structure, right? This right here is the entire structure, and this entire thing is the SND zone, right? So your goal is to wait for this price to come up to this SND and then wait for it to fall tremendously. That is your job as a trader, right? Your job as a trader is not to jump in every day and make money. Your job as a trader is to find your strategy that works for you, that you can work on that strategy every day and refine it to the best way possible that works best for you, that you can make a system that you can wake up, open up your laptop, and do it over and over and over and over, right? This is not just some kind of rich quick type of thing. Oh, I click a button and then I make the money, or all that stuff, right? Even though it is that simple, there is so much things that goes behind it. So what you should be doing is that if once you find the trend of your stock, like right here, and you see that red candle, you should not be shorting the stock, right? You should not be shorting the stock at all. This right here, you should be buying more. Look at it. We're gonna look for this candle right here on the lower time frame, right? Once we look at this candle in the lower time frame, right here, let's go to the 4-hour. We're gonna look for that purple line that we drew. You guys see that? It's actually a mark. This is actually a mark up for the stock to go higher and higher. Check it out. So you had the spring right here, right? It went down. Once the stock went down, it went up, and then it kept going higher and higher. Oh, give me a sec, right? Right, the stock went up. This right here, the stock goes up. I'm gonna make this a demand zone. This right here goes up even higher. This downtrend right here, another markup on the 4-hour, right? Look at that. It just keeps going higher and higher. Mark down, go up higher and higher. It's creating higher highs and higher lows, right? It goes up higher and higher. So now people's like, yo, the stock has been going up for so long. It's considered extended. Now that they think we're going to short the stock, after they short that stock, not understanding the market trend, it keeps on going higher and higher. It's just basically an accumulation for a mark up, right? So don't make those mistakes where you have a trend and you don't understand where the stock is going. Because every time you go against the trend, your account will always take a beating, right? So your job is to find that trend. Your job is to find that trend, put your rules in place, and make sure you follow your system every day, right? Once you have that strategy in place, you put your risk management, and you should be fine. And you let the play run. Okay, just let the play run. So let's look for an example right here. I want to show you guys a real example and how this should be played. Let's not look for Exxon because people might think, oh, he's practiced this before. He's capping. So I want to make sure I get it. Let's go to a random stock, Neo. I was playing Neo yesterday. This thing was beautiful. You made bank off of Neo, right? Delete everything. There you go. I'm gonna go to the daily. Okay, right here, daily. Right. I go and find where my stock is. Right. Right now, my stock is in a downtrend on my daily. Right. How do I know? Because it's creating lower lows, lower highs. Right now, this has to be liquidated. If you don't know what I mean by liquidated, I have a video on that too. Check that out. Everything is out on here, right? And look at that. We just liquidated 15.8. Now we're about to go and head back to 14. Why? Because I understand the trend where it's going, right? So people here that keeps think, excuse me, I got tongue twisted. People here that keeps thinking, oh, this is a demand zone, he has to bounce. Nope, got liquidated right there. Oh, this is a demand zone, he got to bounce. Nope, got liquidated right there. People think, oh, this is a demand zone, it definitely has to bounce. Nope, gets liquidated right here, right? Because they don't understand how the market moves. They don't understand how price action moves. They depend on indicator because they're freaking lazy. They don't want to put in the work, right? But look at this. If you understand your trend, you should not even be going long in the stock, right? If you went long in this candle right here, this was where's my polyline real quick. So this was the stock going down, right? This was a mark down for the stock to keep going lower. When people think in a lower time frame, this was a spring where it can go up higher, right? But once you understand the rules of your trend, every single time there's a Wyckoff that you're doing a Wyckoff, it should not be going against the trend. Every single time it's in a downtrend, the only thing you should be looking for is that UTAD, that upthrust after distribution. Once you get that UTAD and liquidate every single structure, break structure, you know you should be taking it lower because we're in a downtrend. And it's vice versa if the stock was on an uptrend, right? So guys, I didn't want to make that video way too long. I want you guys to take that home with you guys. If you have if you applied this and you have any question, just put it down in the comments, and I'm most likely to help you. I'm more than likely to help you, right? Uh, that's all I have for you guys. Take it easy. I gotta run to a meeting. Trade safely.